Ladies and gentlemen, good day and welcome to the XPRO India Limited Q4 and FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bhaskar, Managing Director and CEO. Thank you, and over to you, sir.
Thank you. Good afternoon, friends. I extend a very warm welcome to all participants in this Q4 and FY24 earnings call. I introduce myself once again as C. Bhaskar, Managing Director and CEO of XPRO India Limited. Today on this call, I have with me Mr. Vinay Kumar Agarwal, our Chief Financial Officer, Mr. Kamal Sevda, our Company Secretary, and Mr. Shobit from our Finance Department. I am particularly happy to have the attendance of our Chairman, Mr. Siddharth Birla, who, while not participating, wishes to hear your views and our interactions firsthand. Orient Capital, our investment relations partner, is as always coordinating this session. We are continuing the practice started a couple of years ago of hosting this annual conference call for our investor community with the intent of keeping investors and analysts familiar with an update about our annual results and major developments. I have had opportunity to meet some of you at earlier calls or at the AGM or otherwise, so I shall not dwell on introducing our company. We are transparent in our approach, but I must state that all discussions here will be within boundaries reasonably imposed by our strategic and competitive position and, of course, legal requirements where applicable. As you are all aware, XPRO India Limited is a diversified, multi-locational company focused on polymer processing with very strong governance standards. The company is family-led and is a professionally managed arm of India's largest and reputed industrial house, the Birlas. We currently have manufacturing facilities at Greater Noida in UP, Ranjangaon in Maharashtra, and Barjora in West Bengal. Our operating units have built up special skills and competencies in the specialized field of co-extrusion with application in the manufacture of oriented films, multi-layer plastic sheets, and multi-layer cast plastic films. Thermoforming supports downstream processes for sheets. Our results for FY23-24, together with quarterly results, have been uploaded on stock exchange portals, and you may have had an opportunity to go through the press release and presentation that we have uploaded to the exchange sites and on our own website. Coming to a quick review of key business matters. India, the world's fastest growing large country, is expanding annually at 6 to 7%. Private sector confidence is reportedly at its highest since 2010. Resilience in manufacturing, massive infrastructure spend, a respectable agricultural output, increasing direct and indirect tax collections, and strong foreign exchange reserves all portend well for sustained growth. Improvements to infrastructure and logistical costs can be expected. Job creation remains an urgent priority. Of course, the usual overall risks, including but not limited to policy and monetary policy changes, geopolitics, inflation, and climate will always remain. However, recent reports do indicate there are expectations of a good monsoon, signs of a pickup in rural demand, and slowing inflation. There could be a durable, broad-based improvement in consumption. Coming to our own performance during Q4 and 2023-24, I am happy to state that the company continued to deliver a strong performance reflecting our manufacturing and marketing capabilities and our strong track record as a key supplier in both the white goods and dielectric segments. The Barjora dielectric film line maintained its dynamic performance, operating at almost full capacity and consistently adapting to produce thinner films. This helped align our product mix and capabilities with current opportunities with our clients. Enhancements were made to the thickness measurement and control systems, necessitating a brief planned downtime time, as we have discussed earlier also. We believe that favorable market conditions will continue to support our operations. The company holds the pole position as the leading and first mover Indian manufacturer of premium dielectric BOPP films and is recognized in advanced markets for product quality, innovation, and service standards. We have cultivated our own development capabilities and compete on strong terms against products from manufacturers even in places like Japan, Korea, China, and Europe. Due to the need to align capacity with domestic demand, we have had to temporarily moderate exports. The sectors of electric vehicles, EVs, and alternative energy are promising for our company's range of competencies. Consumer durables, including refrigerators, manufactured by our OEM customers, key client base for co-extruded sheets and thermoformed liners manufactured at our Ranjangaon and Greater Noida units, faced difficult market conditions during the first half of the year, as would have been seen in the quarterly results. The offtakes for consumer durables saw a limited revival in the third quarter and onwards, in anticipation of the festival season and recovery. The white goods markets improved to some extent towards year-end, and one may expect revitalized demand in coming periods. But competitive demands on our kinds and products frequently translates to pressure on our pricing. The government's PLI scheme has likely tempted some refrigerator manufacturers to create sheet capacity for a part of their requirements. Nevertheless, our flexibility with multiple lines, skills, and track record built up over years, and our focus on reliability and operational efficiency means most leading brands remain our notable clients. Now, considering the Q4 performance, revenue from operations was rupees 128.41 crores against rupees 124.27 crores in Q4 FY23, registering a small growth of about 3% on a year-on-year basis. Production volumes themselves were almost 20% higher at 7,964 tons, while sales volumes, or actual physical dispatch volumes, were 9% higher at 7,047 MT against 6,454 in the corresponding period last year. Further, material valued at about rupees 1.4 crores was in transit due to Red Sea-related shipping delays and accordingly was not included in sales as per applicable accounting standards. EBITDA of the dielectric film segment, as well as that of the co-extruded sheets and cast film segments, improved in Q4 on a YOY basis. However, the overall EBITDA fell from 15% to 13% on a Q4 YOY basis in view of the higher share of co-extruded sheets like films business in that quarter. PBT in the overall was higher by 8.5% at 16.52 crores for the quarter, including of other income. We continue to see sustained domestic demand for XPRO's biax dielectric films, with our market share still at over 30%, with the balance being substantially met through imports. The hot summers that we are now experiencing have also contributed to a healthy outlook for the consumer durables business, with refrigerator manufacturers looking to revitalize and strong demand. Now coming to the full year FY24 performance. Our performance continues to reflect the overall climate in our markets, the impact of strategic steps taken during the last few years, and our position as a key supplier to the growing white goods and dielectric segments. Aggregate production during the year grew by 4.8% to 27,891 tons against 26,607 tons last year, excluding toll manufacture from the erstwhile unit which we discontinued in the previous year. Overall sales value, however, was lower by 8.9% at rupees 465.41 crores. The fall in sales value reflects the net impact of the lower polymer prices prevailing through much of the year, discontinuation of toll manufacture at the erstwhile packaging film unit following completion of transfer in October 22, which had meant a reduction of 5 crores in the sales value. Export consignment of approximately rupees 1.144 crores, as I mentioned earlier, being still on high seas due to extended sailing times on account of the Red Sea situation. In this background, the sales of dielectric films were rupees 145.89 crores against rupees 156 crores previous year. Co-extruded sheets and liners were at 255.64 crores, and the cast co-extrude film sales were at 59.38 crores against 53 crores in the previous year. Other operating income was at rupees 4.5 crores against rupees 4 crores in the previous year. Production costs were controlled with productivity enhancements, and together they contributed to an operational PBIDT of rupees 66.1 crores against rupees 74.4 crores in the previous year, with the EBITDA margin being maintained at fairly similar levels, with the level being at 14.2% in the year against 14.5% in the previous year. Overall PBIDT, including other income, was at rupees 78.33 crores, very marginally higher than that of the previous year when it was rupees 78.28 crores. Continuing to reduce term loans for existing operations, during the year we prepaid rupees 15.31 crores of outstanding working capital term loans under the Guaranteed Emergency Credit Line government guaranteed schemes, which were actually repaid well before schedule. There are now no outstanding term borrowings for existing operations and accordingly no repayment liabilities in the current year. Interest and other finance costs were also accordingly lower at rupees 5 crores against rupees 7.5 crores in the previous year. Profit before exceptional items and tax was rupees 62.18 crores against rupees 59.23 crores in the previous years. We had an exceptional item of rupees 2.02 crores being a right to recompense exercised by our consortium bankers pertaining to a commitment of 2016, notwithstanding our demonstrated creditable performance on prepayment of outstanding borrowings over the last few years. Accordingly, profit before tax was rupees 60.16 crores against rupees 59.23 crores in the previous year. Global recognition for XPRO products remains strong. Exports of dielectric films, however, were curtailed due to capacity constraints, while the exports of other extruded sheets and films were significantly higher bringing total exports to rupees 13.4 crores against rupees 17.4 crores in the previous year. Net debt to equity stood at 0.07 times and delivered a healthy ROE of 17.5% on the capital utilized through much of the year and 11.5% on the expended capital at the end of the year. It is material that we look at on the capital actually utilized through much of the year because the enhancement in capital happened only in March. The ROCE on the expanded capital was about 11%, whereas it was around 25% in the case of the original capital, which was utilized through much of the year. The board has recommended a dividend of rupees 2 per equity share on the expanded capital of the company. Some other important developments include: in July 23, Malabar India Fund exercised their full entitlement for the warrants they held, and accordingly 24.6 lakh shares, including bonus shares, were allotted to them as per their entitlement. Further capital raises were announced in the year under review to help support our strategic vision of building global significance in the dielectric films industry. We were delighted to receive shareholder approvals at the EGM held on January 16, 2024 for raising up to 140 crores via warrants issued on a preferential basis and up to 150 crores via qualified institutions placement. We are pleased that the company's offerings triggered keen interest from reputable, informed and judicious investors, and in a very short time, the company could complete both offerings by issuing and allotting during the year. Total capital raised during the year was approximately rupees 290 crores. Let me now update you on the capacity additions in progress. I think many of you are waiting to hear this actually. The first phase of expansion to double capacity at the existing location at Barjora is well underway. Significant progress has been made on implementation at the brownfield site, and management believes that we are on track to achieve operations in the current year as announced earlier. While the possibility that European supply chain issues may delay the arrival of some equipment, and this fact cannot be fully ruled out, but at the present moment, any significant delay in the broad timeline announced is not evident. As per our earlier announcements, the second new line was to be set up at another appropriate location. After a careful study of relevant factors and as a step towards enlarging our successful footprint in the dielectric film industry's global supply chain, our board has approved the setting up of a subsidiary in the United Arab Emirates. A wholly owned subsidiary is being incorporated as a limited liability company in the free trade zone in the Emirate of Ras Al Khaimah within the United Arab Emirates. Core equipment is already on order and work on the ground will begin shortly so as to align with our articulated intent of starting operations there in the financial year 2025-26. These new lines each represent the largest investments undertaken by the company. The expansion is expected to enhance our domestic first mover advantage, besides helping achieve a globally worthy capacity and market standing and even greater credibility as a supplier of state-of-the-art dielectric film products and intelligent solutions. Furthering our sustainability initiatives and in accordance with the agreement with the Tata Power Group, the company acquired 26% of the equity capital and rights thereof in TP Mercury Limited for rupees 1.35 crores. The installation of generation equipment, of solar power generation equipment, is approximately 90% complete. Tata Power had communicated some delays in transmission system. However, we anticipate that the supply of lower cost solar energy through open access to the company's Ranjangaon unit would commence well before December this year. With this, I open the floor to any questions and answers. Thank you so much.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Pranay Roop Chatterjee from Burman Capital. Please go ahead.
Hi, sir. I have two main questions with respect to dielectric films, both of which pertain to the overall market and your strategy, right? Firstly, before I get into that, could you disclose how much of your production in dielectric films is actually in the 6 to 7 micron range or thereabouts? Is it possible to disclose that?
Pranay, thank you for your question. Point number 1, the exact gauge distribution is something that you will appreciate is almost a trade secret. So honestly speaking, I would not like to disclose the exact distribution. However, that said, let me tell you that in India today, modal consumption, and I'm using the word modal very generically, is in the 6, 7, 8 micron thickness.
Right.
Does that sort of answer your question?
Yes, that answers the question and also helps me move into my next question. So I was trying to understand how in the overall market, and primarily the data I've used is import data. I've tried to understand two things. One is, at all are films getting thinner over the years, number 1. Number 2, how are the different film ranges in terms of thickness, how are they priced? And then thirdly and lastly, who are these guys who are exporting to India, and just categorizing them into 2 categories, Chinese and non-Chinese. So what I observed was the weighted average thickness, if there is any sense in that word, which is simply weighted by the quantity in tons imported, and then the micron thickness is actually very, very steady at 6.5 microns for the last 10 years. And if I look at the sub 3 micron range, I'm not even talking sub 2, sub 3 microns, there the market seems to be very, very, very small, right? So I'm just trying to think, basis the line we have installed in India and which would start soon, what thickness range exactly are you targeting, and what blended realizations do you see for the new line, vis-a-vis your existing line?
Okay, let me answer your last question first. You will again appreciate that the blended realization on plans are subject for a call, right? But having said that, let me tell you 2 things. 1, when we talk about a line capability, it talks about a range capability. So these new lines will have a capability, let's say 2 micron upwards, against a higher range in the existing lines. So it gives us the capability to meet a wider range of the market requirements. Point 1. Point number 2, much of the import data that you see, since we also keep monitoring it, is actually a large assemblage of numbers where it's rather difficult to extract too much data from, because when you talk about dielectric film import or a capacitor film import, you will find they don't really always distinguish between a metallized film and a plain film. So when you look at these numbers, you will see sometimes the price variances are dramatic, and that is because it could be metallized or it could be not metallized, it could be high heat resistant, or different types of films. All I'm trying to say is that that data would need a lot more careful analysis.
Got it.
Thirdly, more important, the trend globally is towards thinner films. Thinner films are applicability and application is going up. It's definitely increasing, and it will become more and more as we go more towards the EVs and towards the things like the solar segment. That said, Indian consumers have not yet jumped in a big way because of the uncertain availability yet, or the lack of availability from a domestic source of thinner films. With the availability of thinner films, they would change when there is more certain availability. Remember, once the spec is changed for their product and for their end user product, then the supply has to be consistent. And that is one reason why this change will take time. I'm not saying it will take a very long time, but it will certainly take months. Now, having said that, when we start our new lines, of course we will start at the model range and then move downwards. So the lines will deliver market requirement. These are not standard products produced and stocked and sold. They are produced against confirmed requirements, designed in consultation with the customers. So there is that one requirement. Also, let me tell you, there is a pretty strong export demand, which also we intend. We are already doing it. We've been constrained dramatically during this year by capacity. But the inquiry and the serious intent is very, very strong to export to the Western world. I don't think we'll export too much to Southeast Asia or the Far East because of China, as you yourself said. So that is a summary. I think I've answered most of your questions.
Got it, sir. That is a brilliant answer indeed. My last question is on competition, and this also alludes to that I broke up the market into Chinese and non-Chinese. And what I noticed was, on an average basis, every year of the last 10 years, the Chinese guys were at least 20% cheaper than the non-Chinese guys. And in the latest fiscal year, both of them were in the range of 500 to 600 per kilo. Now, obviously, metallized, other characteristics, you were right, there is possibility that is muddling the numbers. But the point is that I'm trying to understand who will you replace, right? Let's say the first time the line starts, day one, week one, month one, whose demand are you taking away? Is it the Chinese?
I've got your answer. Remember, stage one, India is today importing approximately 70% of its requirement of what we call base films. There are other types of films which are different, which also will be offered for the same application or similar application. But when I come to the fact that the first thing that we will target is this percent which is being imported into India. Of course, when I say first thing, it's other than the exports. Now, within this, yes, there is Chinese material. There are Indian players trying to play the game. Certainly there, and it's not correct to assume that dielectric film is a single product. There are a number of specs. There are a number of applications, each one requiring different formulation, different specs, most importantly, different rigor of application. Now, we would work towards substituting only at the upper end of that band, not at the lower band. So I would be happy if a Chinese product continues to cater to the lower end of the market, because it actually leaves me free, capacity free, to meet the higher value added ends. Now that some of it you would have seen through the price differences. Yes, I know we are more expensive than Chinese film, but then I guess if you offer a engineered product with a guaranteed, when I say guarantee, I don't mean a physical guarantee, but with a moral guarantee for performance, you have to be higher priced, right? Or you deserve to be higher priced. I'm sure you'll agree.
Got it, sir. Thanks for answering my questions. I'll get back to the queue. All the best.
Thank you, Pranay. Thank you.
Thank you. We have the next question from the line of Romil Jain from Electrum TMS. Please go ahead.
Yeah, hi. Good afternoon, sir. Am I audible?
Yes, you are perfectly well, Mr. Romil.
First question is, if you can throw some more details on whether we see the capacity coming up in the